I'm Charlotte McLeod with investingnews.com, and here today with me is Edward Sterck, Director of Research at the World Platinum Investment Council. Really good to have you. Thank you for being here.
Well, Charlotte, thank you very much for inviting me on again. It's a pleasure to take part.
Really good to be catching up with you. And of course, we are here to talk about the World Platinum Investment Council's latest quarterly report. So of course, we're going to get into those Q3 numbers, but there's also a lot of really interesting projections forward for 2025. So I thought we would start there. So it looks like the WPIC is projecting a third consecutive deficit for the platinum market in 2025, I believe at 539,000 ounces. So I thought to begin, if you could put that into context with the last couple of years.
Yeah, so as you mentioned, it's the third consecutive market deficit. For context, in terms of scale, the market is just shy of 8 million ounces in terms of demand. The deficit for 2023 was a little bit over 750,000 ounces, and then that was just shy of 700,000 ounces last year, and as you say, a little bit over 500,000 ounces forecast for 2025. I think the key thing that we're seeing really is just a persistency of certain themes. So it's effectively ongoing supply constraints and ongoing robustness in terms of demand, and particularly for the automotive industry, where in fact actually for 2025, feeding into that deficit, we're expecting, it's a modest 2% year-on-year growth in automotive demand for platinum, but that puts automotive demand at an 8-year high. And I just think that's quite an interesting fact in the context of a market where we were expecting ongoing electrification of the drivetrain to ultimately result in less platinum demand from the automotive industry going forwards.
Yeah, really, really interesting. And I think it does show some continuation of the trends that we've been discussing throughout the year. So usually when we talk, I leave the price questions for the end, but just because I think it's probably what is on everybody's mind heading into 2025, is this going to be the year that we see platinum break out of that range that it's been in for quite some time now? I remember from previous conversations, above ground stocks were quite key to having that happen. So any thoughts there?
Yeah, I mean, it is the the elephant in the room, really, the platinum price, and why it hasn't reacted to the deficit so far. Certainly, above ground stocks are a feature of that. So what we're seeing is those above ground stocks are being depleted in order to balance the disconnect between demand and this availability of supply. And ultimately, at some point, above ground stocks will be drawn down to the point where the market will begin to see tightness reflecting in price. The problem is, from an above ground stock perspective, is that it all slightly depends upon different market participants' definition of what constitutes above ground stocks. So ours are effectively any material that's above ground, vaulted and unallocated. So we don't include things like ETFs or working inventories held by the automotive or industrial end users, but a lot of other people do. So we've done some work on this recently, particularly on ETFs, and the conclusion is ultimately that yes, ETFs do form a part of above ground stocks, i.e. they will be a source of supply, but only at much higher prices than where we sit today. So effectively, the holders of above ground stocks, on average, only dispose of those holdings once prices rise above their marginal acquisition cost. And for platinum, that's just a bit higher than $1,100 an ounce, and you only really see the disposals accelerate at even higher prices. So, above where we're sitting today. The other thing is that in order to try and answer this question about why haven't platinum prices responded to the underlying deficits, we've built a multivariant regression analysis model that looks at the factors that go into establishing platinum market value, how they've related to platinum price movement in the past. So this is a backward-looking exercise, but you could project it forwards. And then what has happened over the last few years. And there's a couple of key takeaways from it. So firstly, underlying fundamentals in terms of demand were the key drivers of platinum market value establishment in the period up to 2011, broadly through the Chinese-led commodity supercycle. Since then, other factors, what we term market economics, so interest rates, the gold price, and exchange rates, and sentiment, i.e. futures positioning, have been more important in terms of setting platinum's market value. And the key conclusion we see is that as these above ground stocks are depleted, the model suggests that underlying fundamentals should return to being the most important factor for setting platinum market value in the future. So it's an interesting time. We can't be too precise on timing, but certainly we think the current situation is unsustainable and should begin to reflect in the platinum market in the future.
It is very interesting. And you started to go into this a little bit, but I've been seeing our audience get more interested in platinum and they're asking questions. And one of the topics that comes up, I think, most frequently is how does the price historically relate to gold and silver price moves? So we know that in a gold bull market, we have gold go first, silver follows. And the question is, is there historical precedent for platinum to follow? So if you had anything to add there.
So if you overlay the sort of historical platinum price movements over gold on a say a kind of weekly or monthly basis, you can visually on a chart see that there is some relation. When you look at it statistically, actually the R squared, for example, is not particularly good. So it's a bit of a quandrum in terms of unpacking that. Ultimately, since around 1880, platinum has on average traded at twice the price of gold, and we're obviously well below half the price of gold at the moment. So we think that, I'm not necessarily a big believer in ratios, but if you are, then realistically platinum should begin to reflect the higher gold prices in the not too distant future. I think taking it from the discussion on sort of price ratios and back to how the gold price influences demand is probably quite interesting, because if we look at the jewelry market, what we are seeing at the moment is the high price of gold is beginning to price some consumers out of the jewelry market, and they're looking for alternatives. And of course, platinum would fit within that search. Also, in terms of white gold, so very much sort of bridal market type part of the industry, platinum and white gold are now trading at the consumer level at approximately the same price. Remember that white gold is only 75% pure, whereas platinum jewelry is typically 990, so almost totally platinum. So they're trading at about the same price. And from a consumer perspective, certainly in the West, if I was offered the option between taking a white gold wedding ring or a platinum wedding ring, I'd probably go for platinum. So I think there is some scope for potential upside from a consumer demand perspective in the jewelry market, just purely as a result of that.
Okay, thank you for going to that. I can tell that it's quite complex though. So now that we've taken a little bit of a look forward at the overall picture for 2025, maybe we take a look at some of those Q3 numbers. So you're talking about demand, and I believe for Q3, demand overall came in at a 2-year low for platinum. So I wondered if you can talk a little bit about that and how the situation may change as we head into the new year.
Yeah, so demand was at a 2-year low, mainly due to a bit of an idiosyncrasy in the way that we portray the numbers. So the biggest factor was a negative demand factor coming in. It's not really so much demand. So we saw stocks held on exchange. So this is stock held in regulated vaults by futures exchanges like NYMEX and TOCOM as part of the collateral for the futures that are being traded on those exchanges. And the participants in those markets can add to those stocks or withdraw them depending upon different economic fundamentals. And they were economically incentivized to withdraw material from those stocks. And effectively although it reports under demand in our numbers as a negative number, it's actually almost like a source of supply. So if we look at automotive, jewelry and industrial demand, they were actually relatively consistent on a kind of quarterly basis compared to historical quarters, not necessarily just versus Q2. So it was really just that exchange stock movement that resulted in depressing the total demand number. And that's ultimately, we think, likely to be a fairly temporary process. The exchange stocks, the stocks held on exchange are reaching very low levels. And ultimately, you need to have a certain minimum amount of stocks held on the exchange in order to have efficiently functioning futures market. My gut instinct is we can't really go too much lower. So I wouldn't expect too much more in terms of exchange stock outflows to influence the market. But you never know.
Okay. Thank you for going into that one as well. And I thought we could talk a little bit more about auto demand for platinum, because you've been telling us pretty consistently that this electric vehicle narrative that they're going to be coming on quickly and strongly is falling a little bit short. And of course, that's benefiting platinum because it means higher for longer for those internal combustion engine vehicles. So how do you see that playing out in 2025? I imagine it's a continuation of that story.
Well, it sort of is and isn't. So what we've got in our numbers is based upon the estimates produced by Global Data. So their forecast is for a 36% year-on-year increase in battery electric vehicle production numbers in terms of light-duty vehicles. And for light-duty internal combustion engine containing vehicles to decline from 79 million units to 78 million units. So that's the base case automotive numbers. Well, those are the base case automotive numbers that are feeding into our figures. However, that said, if we were having this conversation a year ago, Global Automotive was forecasting the battery electric vehicle market to grow from 10 million units in 2023 to 13 for 2024. And through the course of this year, because of the consumer reluctance to adopt full battery electrification, they were continually downgrading those expectations to only, I think it's about 10.7 million units now. So, I think they're listening to what the automotive industry is telling them that they have to achieve. And remember that the auto market has got this regulatory requirement to reduce their fleet-wide CO2 emissions per kilometre. And particularly in Europe this year, that's stepping down by, I think, 15% in terms of the threshold from July onwards. So there's a lot of pressure on the automakers, and I think that's feeding through into their guidance into the market. But the data we're seeing at the consumer level just suggests that people are very reluctant to make the switch. You're seeing a plateauing of battery electric vehicle market share, an acceleration of hybrid electric vehicle market share. So consumers are willing to accept partial electrification. And it's hard to see that trend really changing that much going into next year. So it wouldn't surprise me to see the expectations for battery electric vehicle market share growth next year being adjusted as the year goes on. And that translates into more ICE vehicles, be they hybrids or pure ICE, and ultimately higher demand for platinum.
Okay, and just to throw in quite a large variable, a current event, since our last time speaking, of course, we've had the US election. So I'm curious to know how you think a second Trump presidency could impact demand for platinum.
Yes, I mean the topic du jour, I think, isn't it? So it's pretty hard to call ultimately. I mean, there's two main areas where Trump's perspectives, policies, what he said, the rhetoric so far could have quite a big bearing on things. So, firstly, on the hydrogen industry, so he said he wants to rescind the Inflation Reduction Act. That's the act that it is the mechanism for which most of the federal financial support is being provided to hydrogen projects in the US flows through. Now, the interesting thing about this is he doesn't like that act apparently, but the biggest beneficiaries at the state level are typically Republican states. So it wouldn't surprise me to see that being rescinded, but then replaced with something that was actually broadly similar, just with a different name. But I should stress that from our total hydrogen projections perspective, it's not as accommodative in terms of subsidies as what we see in Europe or China. So the US, from a hydrogen perspective, plays a distant third fiddle to the demand expectations for Europe and China. So it's not as important. On the automotive side, that's where things get really interesting. His biggest supporter really has been Elon Musk, who owns Tesla. And yet Trump has said that he's not a fan of EVs. I think Tesla's got a first mover advantage over the established Detroit automakers in terms of production, technology, all these sorts of things. So even making it, reducing perhaps the support for battery electric vehicles in terms of tax incentives and things like that, people are probably still going to buy Teslas. But it makes it less likely that Ford and GM and the others are going to continue to push that battery electric vehicle narrative in the US in particular. So I think that could roll back into being more ICE vehicles, maybe hybrids, maybe pure ICE, and that would be mildly constructive from an automotive demand perspective. But we've got to put this in context. Everyone tends to focus on the US. It is the biggest market, biggest economy in the world. But actually, from an automotive perspective, it's not as important as Europe, and it's certainly nowhere near as important as China. And to give you some context, the battery electric vehicle market in China alone is now bigger than the whole of the US auto market. So it's China and Europe that drive the forgive the pun, but drive that industry forward, not the US.
Okay. I really appreciate the context and also the answer on a situation that's changing very quickly. So I'm sure we'll check back in with you on all those events as next year progresses. Okay, looking over to investment demand for platinum, I think this is also an interesting topic. Since our last conversation, I believe we had Costco start selling platinum bars and coins, so that's interesting. But believe for the quarter we saw a net disinvestment. So I wonder if we can take a look at that and also looking forward to 2025, because I think there's a projected increase in investment demand for next year.
Yeah, so the net disinvestment is really ETF linked. So we saw 300,000 ounces of ETF disposals in the quarter. Now, that came after Q2, where we had 444,000 ounces of ETF accumulations. So it's both in both quarters. It was mainly within Europe, actually mainly in the UK market. Um, I think it's possibly something where people managed to get their timing right and take some profits. It could be that there were positions that were ultimately hedged against something, perhaps in a short position in the equity market. Who knows? Or an element of capitulation, having expected a much more dramatic and significant upward movement in the platinum price than happened to manifest over the course of the summer. There's many different theories we could come up with, but ultimately we've seen those outflows. Looking into next year, we're expecting modest accumulations at just 50,000 ounces net across the different geographies. What I would say, however, is with this theme that's, I think, increasingly well understood and believed in by the market, that we've got these ongoing deficits. They will eventually translate into some elements of price pressure. If that begins to come through next year, then of course that investors could choose to try and participate in that by buying ETFs. And so there is, I'd say, upside potential to the 50,000 ounces that are in our base case forecasts.
Okay, and if we take a look over at supply, we had an increase in supply in the third quarter, which it looks like that was kind of on the back of increased mine supply for the most part. So wondering if we can break down that a little bit and also take a look at the health of the miners in this price environment.
Yeah, so in terms of supply, the main theme really for this year has been the stabilization of the electrical supply situation in South Africa. So if you recall, last year we had ongoing load shedding, as they term it there, which is where power generation was inadequate and the industrial users of electricity were having to curtail their demand. And that was managed by the producers, the platinum mining companies, by flexing the power they were putting through their smelters. And so that resulted in them building up a work in progress inventory of what's termed concentrate, so the material that's come out of the mine and been processed to a certain level, ahead of the smelters, so before you get through to producing a map that then goes through to the refineries. What we have seen in the second half of this year is that the power availability situation has stabilized. That's allowed for a higher availability of the smelters. And so they've been able to batch process, well, not necessarily batch process, but feed through more of that work in progress inventory they've been sitting on, and that's flowed through to an increase in refined metal supply. It's kind of a bit of a one-time event, and we don't necessarily expect that to continue through to next year.
Okay. Any final thoughts you would add there? I don't think we've covered the recycling supply situation for the quarter or heading into 2025.
Sorry, you did ask that question. Yeah, so on recycling, during the quarter, I think the expectation is that we're seeing recycling begin to pick up towards the end of this year. So the quarter itself was not necessarily that exciting, but going into next year, we're expecting a 12% increase in recycling supply. That's completely predicated upon an expectation that we will see an improvement in the availability of end-of-life catalytic converters. Now, that's something, again, going back to 12 months ago, if we were having this conversation last year, we'd probably been saying the same thing about 2024, if I recall correctly, and yet it hasn't come through. So, I think we have to have it as a base case assumption that recycling will recover. It's at very depressed levels at the moment, but we're not necessarily seeing it so far. So there's certainly risks that recovery profile could be pushed further out into the future, which would obviously mean lower recycling levels next year than are currently forecast.
Okay, I think we've taken a pretty good look at Q3 and heading into the next year for platinum. Is there any thoughts that you would leave people with heading into that time?
Look, I mean, the theme is really just this ongoing constraint in terms of supply, and supply being inadequate to match up with demand. Demand is looking robust. I think there's upside potential to automotive and jewelry demand in particular. And this ongoing theme in the automotive industry of consumer reluctance to adopt full battery electrification is something that is just looking like it's going to continue for the foreseeable future. And that's maybe not great in terms of trying to reduce global emissions, but it is positive for platinum demand.
Okay, well, really good to get all of your thoughts and hope to have you back next year to talk about these events as they continue. It sounds like we have a lot of themes that we've been watching for a while, and we'll keep doing that. So thank you again so much.
Super. Thank you, Charlotte, for having me on.
I'm Charlotte McLeod with investingnews.com, and this is Edward Sterck with the World Platinum Investment Council.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.